The relative strength index.
The RSI indicator.
The RSI, the relative strength index.
The RSI and
the relative strength index.
RSI stands for Relative Strength Index.
Popularly known as the RSI.
RSI
Is an indicator used by most stock and forex traders. So, what is the RSI?
So, what is the RSI indicator?
It was on June 1978 when J. Wallace Wilder developed the Relative Strength Index, the RSI or the RSI, and then this is it, the Relative Strength Index, and published it in a 1978 book called The New Concepts in Technical Trading. The Relative Strength Index, the RSI, is a technical indicator used in the analyzing of the financial market. It is intended to chart the current and historical strengths or weaknesses of a stock or market based on the closing price of a recent trading period. It is important that you should not confuse the RSI with relative strength.
There's the same misconception every single time.
The RSI is classified as a momentum oscillator, measuring the velocity and magnitude of price movement. The RSI is most typically used on a 14-day time frame, measured on a scale from 0 to 100.
The RSI values range from 0 to 100,
with the high and low levels marked as 70 and 30 respectively.
Now, this line here is 70 on the RSI, and this line here is 30 on the RSI.
The RSI provides signals that tells investors to buy when the security, the pair, or the currency is oversold and to sell when it is overbought.
That is often used for identifying overbought or oversold market.
it's an overbought, oversold indicator.
It is an indicator, and sometimes people will say you should never trade indicators. They're just kind of a breakdown of price, right? You should just look at price.
So like I said, the RSI, the relative strength index, should not be confused with relative strength.
You buy when the RSI is oversold, you sell when it's overbought. No, this doesn't work. Not by itself.
Finally, Caldwell discovered the existence of positive and negative reversals in the RSI. Reversals are the opposite of divergence. For example, a positive reversal occurs when an uptrend price correction results in a higher low compared to the last price correction, while RSI results in a lower low compared to the prior correction. A negative reversal happens when a downtrend rally results in a lower high compared to the last downtrend rally, but RSI makes a higher high compared to the prior rally. In other words, despite stronger momentum as seen by the higher high or lower low in the RSI, price could not make a higher high or a lower low. This is evidence the main trend is about to resume. Caldwell noted that positive reversal only happens in uptrend, while negative reversals only happen in a downtrend, and therefore their existence confirms the trend. Limitations of the RSI. True reversal signals are rare and can be difficult to separate from false alarms. A false positive example of the RSI reversal would be a bullish crossover followed by a sudden decline in a stock. A false negative would be a situation where there is a bearish crossover, yet the stock accelerated suddenly upward. I've had most traders say trade the RSI when it is on the overbought or oversold level. For example, if the RSI is at the overbought level, it means the price could fall, and if the RSI is on the oversold level, it means the price could go up.
This doesn't work. Not by itself.
That can be very misleading. But they forget that the RSI can stay in the overbought and oversold level for a very, very long time. So let me show you a better way to trade the RSI. J. Wallace Wilder further believed that divergence between RSI and price action is a very strong indication that a market turning point is imminent. Bearish divergence occurs when price makes a new high but the RSI makes a lower high.
Is to look for divergences between the RSI and the price of the stock.
Bullish divergence occurs when the price makes a new low but RSI makes a new high. So when there's a discrepancy in price, for example, if the RSI is going downwards but the price is going upwards, it clearly means that there is a divergence in price. In other words, a discrepancy in price.
For example, when the price rallies to a new high, but the RSI cannot increase to a new high, then we have a divergence.
So this is a short video I made showing you guys how to trade the divergence trading strategy. And the strategy is so simple that you can do it from your phone.
This is gonna be all done from your damn phone.
Okay, so clearly you can see a divergence at this point. Let me draw that out. So at this point, so this high is here. And with the RSI, there's a discrepancy at this point too. The RSI and the price is diverging clearly at this point. So I'm looking to take my trade on this. You can see a 1-2 candlestick. This is just a one candlestick, one candlestick, one candlestick. So I'm looking for a 2 candlestick push to the downside, and that is my previous market structure level. So I'm looking for a break of this level. Clearly there was a break, but there was no retest. This candlestick did not come back and retest. So this is a retest. Alright, as you can see, this was a beautiful retest, and then the engulfing candlestick to follow suit. And let's see the ATL value of this candlestick quickly. So the ATL value is 21.2, and let's jump in on this trade. Let's see 21.2. So approximately 32 pip stop for a sell. So clearly a sell, 32 pip stop.
Relative strength index, okay?
Yeah. So a 32 pip stop, and you can see a 1 to 1.5 was a win. A 1 to 2 was also a win. So is the RSI overbought and oversold strategy a good trading strategy? Well, it all depends on how you intend to use it, but as for me, I really don't think it's a good forex trading strategy on its own. Maybe adding in some more confluences like price action and the engulfing candlestick and the likes of it will help filter out the bad trading setup. So guys, personally, I like to use the RSI only to trade divergence in price and a break and retest of previous market structure with an engulfing as my entry. So as you can see, this is a 4 reason, or should I say a 4 confluences trading setup. Well, that's just the way I like to use the RSI, the relative strength index. So feel free to steal my trading strategy. It's free, but all I want you to do in return is to smash that like button, that little like button. Okay guys, please don't roast me. This is my first time making a content like this. I will improve as time goes on. So that's it. So real quick, if you want to trade with me live every single day, click the link in the description to join my free VIP Telegram group. And also, only a small percentage of people who watch my videos are actually subscribed. So if you end up liking this video, please make sure to subscribe. It's free, you can always unsubscribe. And don't forget to like and share this video to help this video rank in the YouTube algorithm. So I hope you guys enjoyed this video. If you found value in this video, please make sure to subscribe, like and share this video. Leave a comment on what video you want to see next, and I'll try my best to make that video. Okay guys, I will see you guys in the next video. Stay XO.